Today was a brutal wake up call for anyone who thinks a gap up always means a bull run. If you bought calls this morning because you saw green on your screen, you likely watched your capital vanish in the second half. The market gave us 60-point gift at the open, only to take it all back plus interest. But here's the secret, the 20 EMA structure never actually turned bullish. Today I am going to show you exactly how to spot these operator traps so you never get caught on the wrong side of the trend again. Let's dive into the Nifty and option charts to see what really happened. I will just hide these particular candles so that we can discuss about the trend confirmation. See, as per 20 EMA, our currently our trend is in bearish trend, right? This low was broken and this is the new high. So till the time this high is not broken and this low is not broken, our intact trend for the Nifty is bearish, right? When this particular low will be broken, then our next high will be this one, right? Always remember this point. Till the time our high is this, so till if this low is not broken and if we want to take a bullish trade, then we must wait to break this particular high, then only we can go for the bullish trades. That's why there was no any trend change confirmation based on 20 EMA structure. Now let's move to the option charts. One second, I will just candles. Yes, this is a 25 550 call option chart, correct? So if you see today market opened gap up, right? So but we don't have a trend change confirmation, that is there was no bullish trend confirmation as per our 20 EMA structure. So we should not take a call option trade. Remember this particular thing. If you would have took this particular trade as per this particular setup, see here, first candle, second candle, third candle, right? This is the perfect three candle setup was formed, 20 EMA 50 EMA trending up. But see what happened, you don't get a target here, but you definitely have made some losses because 20 this particular candle closed below 20 EMA, so you would have booked some loss in this particular trade. So till the time we don't get a 20 EMA change structure change confirmation for the trend, don't go for the call option buying trade. Always remember this particular point. So in this case there was no call option buying trade today. Let's move to the put chart. See here, because of the gap up opening, 20 EMA was trending below 50 EMA, so we must have to wait till our primary filter says look for the put option buying trade. See here, 20 EMA is trending up, 50 EMA is also trending up. Here you can look for the setup. See here, setup was found, first candle, second candle, third candle, perfect three candle setup was found. But in this case what happened, this high is not broken, right? Correct. So our trade would not have got executed. Perfect. So overall, if you see today, there was no call option buying or put option buying trade. So it was a capital protection day, but most of you must have burned your capital because of forced trades and revenge trades. Remember, never force trade, always go with your setup. Now, while Nifty was trapping option buyers, the individual stocks were telling a different story. Even with a specific bullish setup in my selected stocks, the broader market pressure was so high that we had to manage our trades with extreme discipline. Let's shift over to the stock charts to see my trade management. Yes. Let's move to the 15-minute time frame as we are looking at the stock trades. See here. Though the Nifty was not given a bullish confirmation, this stock is trading, making higher highs as per 20 EMA. So I took a trade here. See, first candle, second candle, perfect inside candle setup was formed. So I took a trade at high of this candle, low was my stop loss. 20 50 EMAs are trending up, and green candle, mother candle has highest volume. So trade got executed here, but stock reversed and I closed the day in small loss at the end of the day around 3:14. Here, see, first candle, second candle, third candle, perfect three candle setup was formed. 2050 EMAs are trending up. Also, green candle has the highest volume. So I took a trade. At high of this candle, low was my stop loss. This trade also I closed in a small loss at the end of the day. This was my next trade. That is a P Pfizer. See, first candle, second candle, perfect uh, inside candle setup was formed. 2050 EMAs are trending up. Green candle has the highest volume. I took a trade at high of this candle, low was stop loss. So stock was sideways for whole day, and at the end of the day I closed this particular trade in a small profit. This was my last trade for the day. See, first candle, second candle, perfect inside candle setup was formed. 2050 EMAs are trending up. Green candle, that is a mother candle, has highest volume. So I took a trade at high of this candle. Low was my stop loss. Stock keep on trending for the day. I don't get a 2 hour profit, but I get a good profit in this particular trade. So overall, it was a break-even day for me in case of my actual stock trading. Today wasn't a day for hope trading, it was a day for structure trading. Nifty proved once again that the 20 EMA is the boss of the trend. If you survived today with your capital intact, you have already won half the battle. If you lost money, don't seek revenge. Seek the logic behind the move. What is today's key takeaway? A gap up in bearish structure is often a liquidity grab. Every rise is just an opportunity for big players to sell at a better price. Wait for the trend change based on 20 EMA structure, not just the candle color. Remember this point. If this analysis help you understand today's trap, hit that like button right now. If you want to master these EMA structures and trade with a trend instead of against it, subscribe and turn on notifications. We do this every day to ensure you stay on the right side of the market. That's all for the today's analysis. See you in the next one. Thank you everyone.